Hey guys, this is Market Update. In this video, I'm going to share a revelation that I've had about what the problem is that Bitcoin actually solves. And I think it's much bigger than people actually realize. So we're going to go through what that problem is, like the biggest problem right now, and why Bitcoin could be a solution. We're also going to look at this cycle where we are right now, because we're at an all-time high, but there is still a second expansion phase to go, in my opinion. So we're going to look at how that cycle may actually play out in this video. So as you can see here, bull market corrections and drawdowns. This cycle has been very mundane. What we've got, like 20% drawdowns, that's kind of it. You can see previous cycles, the bull market drawdowns are a lot bigger, right? So the 2017 cycle was around 30% drawdowns regularly. Here we have the pandemic and the China mining ban. But other than that, the previous cycle only had, 20, 25% drawdowns. Now we're getting 10 to 20% drawdowns. So, in a bull cycle, unless you get kind of external shocks, you probably don't get big drawdowns. Now, we can't invest for those shocks, right? We don't know. The shock is, the whole point is you don't know it's coming, right? So you can't really invest for that. But this seems to be a very kind of mundane price cycle in terms of the bull market, right? Not too many drawdowns other than, just some sell-offs because Bitcoin is a volatile asset. So it's been a red month. It's the halving this month, which is insane, which usually is, you get the halving and a big expansion after that. Is it the halving? Is it the macro cycle? It kind of is everything. But, we have to look through that, because why we're buying Bitcoin here, it's more for long-term investors at this point, right? Short-term traders are buying, during the bear market, looking for the next phase to be the upside. We maybe have one more pump left in terms of a phase, right? Which could be 3 or 4 months of a phase of an upside move. But the market's probably not there right now. It's probably actually looking for when the Fed tells us they're going to cut, right? And so there's a lot of uncertainty there. And so maybe a pause for right now. If you do trade, check out the deposit bonus to Bybit. You can get up to 30K. Just check the link below for the details, and they'll give you that deposit bonus if you're new. The huge revelation that I had is that I now understand Bitcoin is really the only way to accurately price in what's happening in our economy. Because a lot's going on right now, right? And you're seeing a lot of news articles about the debt. And you're seeing really prominent figures in society, like, Ken Griffin from Citadel and BlackRock's Larry Fink, right? They're all saying the debt's too much. There's going to be a huge problem. We should not have this amount of debt. We need to do something, right? But even these people, and far be it from me to say that they're wrong, because obviously they're much more successful than me. They know what they're doing, right? But what they're actually saying is, in my opinion, actually wrong, right? Because what they're saying is we need to reduce the debt. We need to reduce the amount of debt creation, right? And what I'm saying is that's impossible. And so let's go through why I think that, and why I think Bitcoin is the actual solution. Now, fair enough, Larry Fink also knows this, because he brought Bitcoin on and he supports Bitcoin now. Even though he was a massive Bitcoin bear before, saying it was an index of money laundering, now he's bringing it on and saying, wait, actually, this could be a solution. Why do I think Bitcoin's a solution? So the first thing is, we measure everything completely wrong right now. We measure GDP growth, right, which is the amount of dollars that are produced in society, the dollar value of that produced. And what I'm saying is, you can't measure actual innovation and economic output in a dollar system where the units keep increasing all the time. Everything we do is based on the price of stuff going up, and that's actually wrong and bad for us. So GDP annualized growth, you can see it huge right here, but the ISM services, which is an actual snapshot of the economy, is actually coming down, even though GDP is up high. Why? Because they're printing $1 trillion deficits. 6-7% of GDP is a deficit. So GDP is really high, right? And we all look at GDP and we say GDP has to be high, because the higher GDP is, that means we've got growth in the economy. No, it doesn't. All it means is that they're printing $1 trillion deficit. 6-7% of the GDP is debt creation. So if you create more debt, GDP goes up. But that's not actual real value, right? Because it's just money printing, basically. It's currency unit devaluation to get any amount of GDP that you want. So GDP itself is completely wrong in the way that it measures the economy, because the economy should actually produce more value for less. And so GDP should actually go down, right? Because you don't need to spend as much stuff if someone invents ways to make it cheaper. And so GDP is obviously completely fake and it's a wrong metric to look at. And they're just going to print money and currency units to force this up because everything is based on the premise that assets go up in value when actually they shouldn't. So that's the one thing. The second thing is very, very clever people are looking at this and saying, the debt is too high, we need to sort it out. What I'm saying is the debt is actually necessary to prevent things falling in price that we think should go up in price. And so the more that the free market forces prices down, which it should, everything should get cheaper for us, right? So housing should get cheaper, cars should get cheaper, right? Everything that we buy, like food and energy, should get cheaper as we invent ways to make or manufacture or dig that stuff out of the ground with more efficiency. So it should actually get cheaper. The problem is that our system relies on these metrics that we need to go up. And so there's a mismatch here. And so the only way that they can force the price of things up is to create more currency units. And the only way that they can do that, the government has to create debt to create currency units, to force stimulus into the economy to push everything up in price. And then eventually, of course, you have to have the central bank literally creating currency out of thin air to buy back the debt and force the price of the debt up as well. And so the debt is actually a consequence of how amazing humans are at driving the price of stuff down. But we've made a fundamental error, which is that we also want assets to go up in value, which is wrong. We are all doing it wrong. Debt has to go up because we all want assets to go up. And the only way to make those assets go up in dollar terms is to print more currency units because we force the price of everything down. All of the products that companies buy, you innovate to bring the price of them down, but you want the stock to go up in the same currency unit that you're pricing things down in. It's impossible. So they have to create currency units. And that is why assets go up over the long term. I want to focus on housing because Bitcoin is sometimes known as digital property, right? And so you'll hear Michael Saylor say, look, it's property rights, it's digital property rights, it's digital property. He says it's not a currency because it is not a currency. It's not legal tender. Okay, it's way too volatile to be a currency day to day, but it's an investment. It's digital property. It's a property asset. And a lot of people say, well, Bitcoin's not physical. You know, I can't touch it, so I don't want to invest in it. That's the whole point. Actually, that is the solve for this problem. The actual solve for the problem that we created as humans is to have property that is not physical and it is digital and can be allowed to accurately price in the fall in price of everything that we have, including our property. The problem is, as you can see here, right, physical goods, physical items get cheaper because we allow humans to invent ways to make them for less energy in, more output out. TVs get cheaper, toys, software, clothing gets cheaper. Why? Because you manufacture offshore, labor is cheap, economies of scale, they become very good at manufacturing, and so they force the price of stuff down. That's good for us, that benefits us. Physical items going down in price is good for us, that is wealth creation. But not my house. No, my house can't go down in value. Why not? Housing is a physical good, just like a TV, just like a car, where we know full well as soon as we buy it, it goes down in value. Why does a house go up in value? What is special about this physical good of a house that should go up in value? It's actually insane when you think about it. A house going up in value, a house gets old, it gets worse. Over time, if you have an investment time horizon of a house, in 20 years' time, there will be new techniques, manufacturing techniques that drive the cost of production of a house down. Why on earth is the price going up? And you can say, well, there's supply and demand within cities. Yeah, so if there's more demand within a city, why not just build more stuff? Why not drive the cost down per unit of housing that you build? Why not take away all of the rules and regulations that say, well, you can't build here and you can't build there? Why do those regulations exist? It's to keep house prices high. Why? Because this is the big error that humanity has made, in my opinion, is that we made a house a financial asset and a savings tool. And that was wrong. Because housing is a physical good, which should be driven down in price. But now we can't get out of it because everyone has debt on their house and they issue debt on their house at a given price. So let's say the house is $1 million and you have $1 million loan from a bank, a mortgage from a bank, where your house is priced at $1 million, and you know with your current wages, etc., you can pay the interest on that house and over time save in the house. But the free market should drive the price of a house down. Now you're seeing that in commercial real estate now. Commercial real estate is essentially going bankrupt because it got too expensive and we invented ways to make it worthless. Zoom and, work from home and video conferencing. So we don't need the office anymore. We demonetized it through technology. And now, real estate, the commercial real estate, big problem, right? That is what humans do. We drive the cost of stuff down to zero. The problem is that the banks and all of the businesses have huge leveraged loans on this real estate that just got demonetized by technology. Why is your property going up in value? It should be going down in value as it gets demonetized by better ways to manufacture it, right? Have you seen those videos online of the massive concrete 3D printer that just prints a house? How much does that cost? Not a lot. So the biggest mistake that we made is that housing is a financial asset with debt created upon it at a certain price. And that means that everyone that owns a house can't have it go down in value, because if we let the free market ride, then everything goes down in price. That means food and energy goes down in price and everything else goes down in price. And that means our wages also can go down in price as well, because we keep the same purchasing power. If our wages go down 20% and everything else goes down 20%, we can buy the same amount of stuff. But we can't let that happen, right? Because if our wages go down and the price of things go down, we have this debt that was issued at a specific price, at $1 million price. So we can't let the property fall in value, even though the free market demands that it does. And so we have a system that must keep the price of a house up. And so we have to create more currency units to prevent the free market doing its job. More currency units that optically raise the price of a house. So loads more units, that means it takes more dollars to buy the house, and so the price of the house goes up, even though the actual value of the house doesn't. And so this is a completely fake, falsified system that we have, just like GDP. GDP needs to go up. Housing prices need to go up. We need to create more currency units. The effect of that is that we all, in this fake scenario that we've put ourselves in, have the price of housing going up, right? Which means that the price of housing goes up. Our wages have to go up, which means GDP needs to go up, right? We're all on this hamster wheel going up, 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 expanding, expanding, expanding. The dollar price has to go up, which means more currency units in, which creates disparities in society because those nearest the money printer make the most, those the furthest away don't. This is an issue. We cannot accurately price the free market. We can't. It's over. It's done. Debt creation has to carry on to force the price of housing up. Now, unfortunately, that means everything else goes up in price as well. Energy and food, shelter, and everything else. And it has to keep going up and actually exponentially keep going up because of the two forces, free market forcing prices down naturally, and our system unnaturally having to force them up. Now remember, the more innovation that we create, and we're creating innovation at an exponential scale, that means debt has to also rise exponentially to keep our house price up that we created debt on. The proof of this is the commercial real estate market, which is imploding because we just don't need it anymore, because we invented ways to demonetize that market. But we can't have the banks fail and everything fail, so we have to print currency units, which creates currency debasement. What is the solution? I think it's Bitcoin, because Bitcoin is property that isn't physical. And that means that it can be allowed to accurately price in the reduction in cost of everything else, where the fiat currency system can't. The fiat currency system, the only way to price things is price going up. And so I don't think that we're going to go over to a Bitcoin standard or that Bitcoin will replace currency. That's not what it is. Bitcoin is a financial asset that can accurately price, a savings tool that can accurately price in everything else getting cheaper, whereas the fiat currency debt-based system cannot do that. And so, look, if you want to buy a house, there is no way that you're going to get a cheap price for a house because the debt system has to keep going. And you have to take this debt out on the house. That's the only way to get it. Unless you wait for some sort of deflationary crash, but those only last for a year or so, right? And then they start printing money again because they have to keep raising the price of stuff, right? Because that's how it works. Otherwise, all the debt is insolvent. And so the only way that we can accurately price the fall in price of goods and services, and just like a house, just like cars, just like TVs, is to be out of that system and have a fixed asset that we can save in, which is property that you can't live in and isn't part of the physical world. The only solution is a digital property that is fixed, and the purchasing power only prices in cheaper goods and services. Now remember, if you have 1 Bitcoin or zero point 0.1 Bitcoin versus anyone else, it doesn't matter what the price of stuff does because you have the same purchasing power. It doesn't matter what the dollar price is, it's irrelevant. If we get a market crash, Bitcoin's going to crash, right? So Bitcoin goes down, the stock market goes down, property goes down. And so if they all go down 30%, you have the same purchasing power in Bitcoin as you did before. Because remember, it's not money, it's not currency, it's a savings money. And so this is the solution to try and get out of the debt-based system, is to save in an asset that isn't a liability, that's property that isn't physical. It's the only way. It's literally the only way that this can happen. And of course, we have to take debt if we want to actually live somewhere. That's the debt-based system. But out of that, the only way to accurately price the deflation of housing, which should happen, is Bitcoin. To prove that, this is VNQ, which is the US real estate index from Vanguard. Now, I think there's some commercial property in here, some residential property. There's also data centers. So it's not the perfect metric of like your house, but it's a US real estate investment trust known as a REIT. This is the price of property in Bitcoin. This is good. This is good news, right? It means property is getting cheaper and more affordable. That's good news, right? That's actually good news. This is what should happen in a free market. When you have a real asset, digital property that can actually go up in value. The price of Bitcoin isn't going up in value. Bitcoin has no price. Bitcoin is just a neutral money with a fixed supply. What it should accurately do is accurately price in the reduction in price of everything else that we create abundance in. It's the only way to accurately price wealth is Bitcoin. This is great news because property is getting cheaper. So you can work and earn Bitcoin and wait and actually get more for your money over time because you let the free market do its actual job, which is reducing the price of physical stuff. So why does technology in Bitcoin outperform everything else? Well, Bitcoin is a new asset, and so it's got these multiple prongs. It's just got fundamental growth because it's being adopted. So you've got outperformance there, but it's also the only way to accurately price in the reduction of goods and services, let the free market do its job and actually make things cheaper, and Bitcoin can accurately price that, right? So a house may be worth 3 or 4 Bitcoin now, and if you wait long enough, it may only be worth 1 Bitcoin in the future because people make it for cheaper, right? And it becomes more abundant. And so there's these two things for Bitcoin and technology. It's outperforming because it simply is a lot of this innovation, which is driving cash flows and revenue for those businesses specifically at a faster rate than other businesses that aren't innovating as fast and creating those price reductions as fast. So that's how I see it. It's a really profound realization. If you want to know more about that, the Crypto Investor course is linked in the description. 300 videos there, private Discord groups about crypto and everything. Bybit deposit bonus down in the description as well. I'm James, it's MyZG. Cheers for watching, and I'll see you in the next one.